TGIF, everyone. How's everyone doing? Hello, Richard. Ingmar. Hi, Cayman. Hugo, how are you?
Good early morning, Dale.
Good early morning for everyone here in California and Sinatra. So let's take a look around. I'm wondering if anyone else is having any issues on trading view, because I am. So everyone knows we had the market's getting hammered again. Dollar, of course, broke out. But I think one of the untold stories of the week, with the dollar rallying to new highs, is what we have here in US dollar yuan. This is a weekly here. It's blown up a little too big, but this looks like a low.
We can't see your
screen?
Your TV tab.
How about this?
Yeah, there we go.
That's it.
Okay, so I know that Ryan and you came in around in here were, looking to buy it, and you were in.
Yeah, we were too early.
Yeah, now it looks like it's on time.
Yeah.
All right, so I think it's significant in the face of dollar strength, don't you guys?
I think it might have had to do with the run-in to the Chinese New Year. Chinese companies repatriating profits and investors or retailers repatriating some yuan into the New Year spending spree. And we got a little bit fooled by it, and we did the low actually on the day of the FOMC, and then all of a sudden the offers disappeared, and we opened up the next day like more than 0.5% higher. And
it was yesterday.
We should be entitled to think that we've seen a bottom.
Yeah, and what would you say the implications of US dollar yuan turning this way in other markets? Will it reverberate if we had some type of move back towards, say, for example, 670, or if we headed back up here? This is going to be a devaluation of the yuan if it heads up this way, right?
Yeah.
And they're on the opposite tracks. It's interesting. They're easing. We're still tightening.
Exactly.
So that's a big part. Maybe they're 6 months ahead of them.
Or behind. Because if you look at dollar yen going from when the Fed started to change their tone, dollar yen going from sub 110 to 116, 115 now, dollar yuan was still coming off. So maybe they're behind all the rest.
Okay. All right. So I found that interesting. Anyway, that was and not many people talk about it. To me, it's like it could turn out to be a big position trade.
Yeah.
Anyways, it's happening. I think we're verge of 7 handles away from reversal, where everyone was so relieved. Probably take it out today, Monday, Tuesday, and that should complete the first wave. Not sure where it's going to. It's the way it looks to me. Of course, getting into some potential around 6. He could make what happened to also thought they missed it.
You're breaking up a little bit. Is it me or is it
I think it's everything.
No, it's Dale's breaking up here.
Yeah, it's my internet slow for me. So get away then if
it definitely.
I'm gonna plug it back. Take
What's
it
that?
away. And unplug my again and see.
Okay, so let me go ahead and
Yeah, we'll
take over. Yeah, all right. Coming over right now. Well, hey, Stel, and we have Cayman, right? Here.
We have Cayman, yes.
Hey, I need to type something out really quick. Do you want to do you have anything you want to update everybody with, like, happen overnight? Just, and then I'll be here in like literally 30 seconds.
Yeah, no worries. I was just gonna say, okay, we do have core PCE in the US today coming up, but really, what's also. German GDP came in at minus 0.7 quarter on quarter for last quarter of 2021. That was well below expectations. It looks like numbers are turning a little bit. So we have, I wrote this on the chat room this morning, we have central banks trying to get on a tightening course while the global economic environment seems to be turning lower. Now, that's not good. That's definitely not good. But, they need to do something to combat this inflation. And they are telling us that they're going to do it. Now, the question is, what happens with markets? And if you've been listening to these webinars for the past days, what have I been saying? I've been saying sell rallies in equities, sell rallies, sell rallies. Well, what's happening? Every rally is being sold. So, if you've been following that, you've probably been doing well. And I don't see how this bias will change anytime in the near future, especially with central banks and the Fed specifically committed to what they've told us they're going to do. Rates are slowly rising. 10-year US is now up to 185. We're getting closer to 2%, which for me is a big psychological level. And as long as they're on course, I really don't see why anybody should get ahead of this this move or in front of this move, unless you're trading obviously intraday for very specific targets. But if you're looking at the general direction, I think it is sell the rally mode for equities, for cryptos, for pretty much any risk asset. And if anybody wants to put things into context, we are down 12% on the S&P, but we're still up 100% from the lows in 2020. So this is not by any means done, and we could see a lot more lower. Now, I do think that central banks are going to change their tune. If we see another, say, 10-20% lower, that's going to bring them in. They've done this in the past. I think they're not going to hesitate to do it again. But for now, I don't think we should be going against this flow. I mean, it's for me, it's it's a sure way to lose some money.
Actually, I'll just mention it real quick. Obviously we have our chat room. That's, it's very active community. If you guys haven't seen the ForexAnalytix chat room and the community that we're all here talking. One of the guys that you'll see, his name's C-Note right here. His name's Chi. Chi I've known for years. And actually, I think one of the last times I was in New York, pre-COVID, we all met up for some beers and I got to meet him and a lot of actually other ForexAnalytix traders, in person, in real life, which is always nice. And Chi actually left he's been trading and, came off Wall Street from a, like a 15-20 year career on Wall Street. And he went to New Jersey and he opened a restaurant just before COVID, unfortunately, but it's actually ended up working out really well for him. But he does still trade, and he's obviously still a ForexAnalytix subscriber. And he comes back and in and out. And by the way, if you guys are in the chat room here, I'll just put you on. I'll put you on. Here you go on Jumbotron. But I guess the reason why I wanted to mention that is that Chi is he like tends to pop back in when he is some volatility comes into the market, and so he's just like volatility, we're in a sell rallies mode, and it's nice when you get this two-way price action now in the markets. Two-way price action is just Chad, you're a goofball. He said, "Hey, Steve's mom." The two-way price action is awesome, and that's exactly what we're seeing here in the markets. And he also made a good point. And I'll say this, if you guys didn't mention this already, because I'm sorry, I was just kind of like in and out like attention wise as we started. Apple had some good earnings last night, and Apple was up pretty substantially. Matter of fact, we could take a look at Apple pre-market.
They seem to have done really well with the supply chain issues compared to others.
Yeah, I mean, you look at the stock. I mean, we're up we're up a couple of $2.50 through almost $3 pre-market. And I was going to say that has really not helped at all. What we're seeing in like the NASDAQ futures and the S&P futures, and you can see everything's just, grinding down towards the lows. Imagine if Apple, wasn't, Apple wasn't up, we'd be down much lower in the markets right now. So, keep in mind, it is Friday. I've been in the camp that we are consolidating this week. After Monday's move, I have, drawn out this triangle consolidation. We rejected resistance yesterday. We are through what I had previously drawn as triangle support. We're through that support, but look, if you want to be symmetrical, then we're probably stopping somewhere around here. You know what I mean? So I'm not married to the idea like, oh, it's breaking down, here we go again. I really think this 4250 level is pretty critical support for the S&P. And as I've told you guys all week, even the overshoots of that, when you're looking at longer term charts, you have to realize that you are going to get some overshooting, of these levels. So, I think where we're at around the 4,300 level, right around here is going to offer support. We could be 20 S&P points on either side of that. And I would say that we're pretty well, in support. I think we are consolidating today and probably will on a Friday. What I'm basically trying to do is caution you guys from getting too bearish at this point. One of the things that has happened overnight that you guys have to take note of, which I found really interesting. I woke up this morning and I got triggered on an Aussie dollar long that I've had that order out there for literally like 4 months. It's just been sitting out there and it got tripped overnight. And I want to show you this because if you guys have been, kind of listening to me for the last several months, even ahead of the new year, one of the, I think it was the trading battle for the brokerage firm, the 8-cap brokerage firm. They do the trading battle. And they match up like two traders against each other. And I'm actually going up against Brent Donnelly next month, around this time next month. And we go head to head, and anyway, at the end of the year last year, Trading Battle did like a, holiday special. Everybody says, hey, happy holidays. This is what we're looking for going into 2022. And I can't remember which one my trade was. My trade was either you sell the euro or you sell the dollar index on a rally to 100, or you buy the Aussie dollar, below 70. And I can't remember which one I said, but I'm just telling you guys, I've been planning on this trade for months. So, and I was talking to Mark Chandler yesterday, and Mark is like, hey, that's interesting. You're trying to fade this dollar strength. And I'm like, well, I've been planning on this trade for months. It's not for me to go long the euro at this weekly trend line. That's not like a, from the hip, wild trade that like, oh my God, I'm establishing a euro long here. No, I've been planning on it for a long time. I even told Chris Weston on Pepperstone, I'm like, yeah, we get down to 111 in the 111s. I'll meet you down there. And
for at least 4 or 5 months, you've been talking about this, Blake.
Yeah, and same with the Aussie too. It's like, dude, I've been waiting for 70 cents, sub 70 cents. I've been waiting for stops to get triggered so I could get long. And I got hit today. I got hit at 69.80 overnight. I was thinking I had a chance, but when
patience, man.
Yeah, well, it's one of those things that I'm not guaranteed to make money. We aren't, and I can plan trades out till the cows come home. It doesn't mean that trade's going to work out. But when I have pre-planned a trade for so long, if you think I'm not going to take it, there's a really, really, really good chance I'm going to take the trade. and and I'm going to stick to my guns unless it was something that really would have altered like the reasoning for me to take the trade. Then that's the difference. It's like, oh, Russia invaded Ukraine and it's going to be bad for Europe, and the euro broke through 111.50. I would have been like, yeah, okay, let's see how this all shakes out. But when you're talking monetary policy, look, this is like a train we saw coming. It's not like I really walked away from this Fed meeting this week, and nothing's really changed from what I was thinking previous week. So, the moves that we're seeing here are probably more end of month, dollar buying than anything else. As a matter of fact, I'd love to hear, Cayman, are you still here?
Yeah, I'm here, but I'm just listening to the news because Pentagon Secretary says that the Russian invasion into Ukraine may be imminent, and now the Kremlin just saying that Putin noted in a call with Macron that the US and NATO responses on security did not address Russia's principal concerns. So there are still meetings planned, but I don't know, are we just beefing up the
hence the spike in crude, right?
Yeah, spike in crude.
Gold coming back a little.
Gold coming back, silver coming back. I don't know.
Yeah, that's interesting. Matter of fact, and if you guys weren't watching, like silver, just for example, a recent update, actually just about 30 minutes ago, maybe, I don't know. You go over here you can see the silver update. We were at triangle support here in silver, so I would not want to be short precious metals, knowing where we're at in. Yeah, you can see there's silver bouncing. Gold is firming up too. So interesting. Dollar Canadian's coming down as crude oil has strengthened here, and so just keep in mind. And there's also an AB equals CD. Thanks, Rick, for pointing that out. Rick in the chat room. He was like, "Hey, Blake, ABCD," and I'm like, "Yep, it looks pretty damn close at 128." So, but anyway, going back
good morning. Am I the only one that thinks that if we get something in the Russia-Ukraine developments, it's not going to have anything but a very short-term impact?
No, that's all. But what are you talking about? Are you talking about stocks, or are you talking about crude? Because two different stories.
Okay, crude is a different story, but I'm talking about
then so if you're talking about stocks, then no, the stock market will shrug this off. It'll be like,
I think so as well. I think if we get any type of response, like jerky response from stocks or other assets besides, obviously, as we said, like crude, natural gas, I think it will be a good opportunity to fade the move.
Yeah, I mean, what I've seen in my lifetime of watching markets and watching geopolitical events, and even during like wartime when we're involved, when U.S. invasions happen, it's usually when it's a U.S. invasion, it's net stock market positive.
Stock market positive, yes.
So you buy the dip, and then anything that really doesn't have anything to do, since we're looking at the S&P, anything that has really unless we're actually doing the invading ourselves, you're not going to see the stock. You're going to see the stock market just kind of shrug it off. Now, would there be maybe some effects of European markets? I think that if you're looking for more of a reaction, you probably have to start looking at how's the DAX reacting, and how's the maybe look at some of the European exchanges if you trade those. So that's it. But anyway, Cayman, going back to what I was going to ask you about the end of
Don't wear them out, Blake.
What?
Don't wear Cayman out.
No, I'm not. I just wanted to ask him since we are end of month.
Got a big interview today.
He talked about the end of quarter I'm sorry, end of month dollar moves based on the value day yesterday. Do you have any other thoughts about the end of month flows that we might see coming, the next couple of days.
Yeah, the models are clearly signaling dollar buying. If you look at the simplest one, which is comparing S&P to the rest of the world, we should clearly see dollar buyers into month end, which should, in theory, take us into the last fixing at 4 p.m. London time on Monday. This being said, since mid last year, there's more and more dynamic hedging going on, where people just react to the moves straight away, as we have seen the dollar coming bid straight away with the US stock markets coming off. So I wonder how much is left to do for Monday. But if the models are correct, we should see dollar buying into Monday. Last couple of months, it's worked until the last day, until the day just before. And then afterwards, it tends to reverse, as we've seen with when most of the flows are done, you're left with the specs, the front runners
holding the bags
in that direction, and then run for the exit.
Right. Yeah, that's very, very true. Okay, well, thanks, Cayman. I appreciate it, and I have no idea what Dale was talking about as far as what you got going on today. But good luck, whatever it is. So
we're just having a coffee on the corner.
Yeah, I'm interviewing Cayman today.
Oh, you are. Oh, look.
You didn't catch the hint, Blake.
Oh man, well, that's pretty exciting. Well, hey, everybody listening in, then you guys are in for a real big treat. I'm not gonna wear them out. Cayman, you're done. I don't want to.
I want to say Dale talk anyway.
Yeah. No, we're excited to. Okay, guys, if you really want to hear just a legendary trader on the desk for, we're gonna say 40 years,
100 years.
My God, no, Dale, he hasn't been around as long as you, for crying out loud. Anyway,
I thought we were contemporaries.
But no, I'm just saying that's really exciting to have Cayman here. So you guys stick around after the data is released. Hearing somebody who's been on the desk for years, traded, been deployed in Japan on trading desks. It's going to be some great stories. All right, well then. Let's not wear him out.
Remember what end of month used to mean to you when you were a broker, Blake?
End of month, the payday.
Yeah, you would do it, but you had one more day to
cram commissions through. Yeah. I'm going to go stand on my desk and sell some stocks. That's what I was going to do back in the 90s.
It was just completely coincidental that near the end of the month was my biggest production as a broker.
I know. I'll dial
look at all these
300 dials today. So I want to talk a little bit about the daily sentiment index of the dollar index and where we're at right now. And I think this is kind of important. I'm going to take you back over to the chat room real quick, and I'm going to take you over to the the DSI is one of those things that we don't take a look at all the time, but you're seeing some pretty big extremes here. With NASDAQ at 15, you've got Bitcoin at 17, crude is at 88. That's, those are all balmy numbers. Lumber's at 8. Wait, is this today's? Oh no, that was I'm sorry. I had to go back a couple of days. Let me go. I was like, that's not today's. Sorry, this is in the news and research room, guys. Here, okay, this is today. So now NASDAQ's at 13. I was going to say those aren't as extreme as they were.
When's the last time you've seen NASDAQ and S&P under 20? I can't remember.
Yeah, it's you got the dollar index that is at 92, right? I haven't
seen that in a while.
That's a big one. You got some of the crudes at 84. Heating oil, gas prices 89. You've got lumber at 13, Nikkei's at 12, NASDAQ's at 13. These are some extreme readings where you have to be a little careful, chasing the market down at these levels or chasing the markets just in general, after these moves, especially as I pointed out, we got the euro dollar at really a key year trend line that we're testing right now. You got the Aussie back below 70 cents currently. You've got the dollar index at new trend highs in its bullish channel, and we're approaching the the chart of the day. My chart of the day yesterday was the dollar index, if you saw it. But then you got the S&P that's I think we are currently consolidating in a triangle, and we're near support. So you got to be real careful chasing the markets down at these levels. I'm not saying that we can't move lower. I am definitely in the sell rallies camp in risk. I'd love to see a move in the S&P back up to the 4,400, 4,450 level, up here to be a seller, but that doesn't mean it's going to happen. I'm just saying that that's what I'd rather play into for this market. But let me ask you guys this: we have some economic data coming in here shortly. We've got, we have the ECI coming out today, and that is something that you and Mark Chandler talked about yesterday, Dale. So what was your takeaway discussing that with Mark Chandler yesterday?
It's going to be hard for the Fed to bring down inflation with wages increasing, and he was looking for more.
All right. Well, then
high readings,
and I think that number is due out today too. That's going to be a big one. You got PCE coming out, personal income. A lot of this is really important inflation data that's going to be out today for the markets. Stelio, Steve, do you have any opinions about inflation data that's going to be out here shortly?
Well,
go ahead, Silvio.
No, I was just going to say I can't really say, because things have been, obviously inflation has been elevated over the past months, but we're getting some kind of indications that slowly we might be topping out. So I think we're going to need to see something quite far from expectations. Like core PCE, we're expecting 4.8% year on year. We're going to have to see something quite far from this expectation to actually move markets. I think it still is quite unpredictable. I don't know what you think, Steve, but I don't have a view really.
I think that trying to predict a single month's number is, an exercise in vain. More or less what you mentioned, Stelio. What I can tell you as a fact is that there is no reason why inflation in general should be going down at this moment, right? We might have volatile readings. We might get if you remember last year, we had a single reading that was like better than the market expected, and everybody was cheering up. Okay, here it is. It started going, lower, and that was an outlier. So of course I can't predict a single number, but I don't think there is going to be a trend for inflation to slow down. Not yet.
Steve, are you looking to fade the dollar here pretty soon?
Soon, yes. At the moment, no.
Okay.
But you know how the market
preferred fiat against the dollar that you're
you know how the markets are though, Dale. I mean, soon might end up being several weeks, right? Depends on how things go.
Or Tuesday.
My preferred fiats would be mostly commodity currencies, right? So I agree, for example, with Blake cherry picking the Aussie. I wouldn't be doing it yet. Personally, I want to see, more evidence, but, he has a specific plan and
he's a wussy. I'm not. I'm a man. He's a wussy.
Exactly.
That's what it boils down to. Right.
But for example, the Aussie, I think is an excellent choice. The Canadian might prove to be an excellent choice as well. The Norwegian kroner, it's my favorite. So, that is most of the times my number one.
That's something else Mark Chandler said yesterday, Blake, that instead of, trying to, fade the dollar peaking, to look at CAD crosses. And you have to admit, with what the dollar's done this week, the CAD rally, although it's been nice, isn't making new highs with the Dixie.
Yeah, we were looking at the Euro Canadian actually earlier this week. We're at a long-term 50% retracement, and even though it looks like a breakdown, it smells like a breakdown this week, but we closed back above like 143, and then you got yourself a false breakdown. So that's just something to think about. I mean, you can definitely play other ways. We are less than 15 seconds away from data, so let's go. Let me pull up the dollar index, and you guys. tell me what's happening here as we look through the markets. Here's your data flash so you can see the data coming out as it's being released. This is included with your ForexAnalytix subscription.
Okay. Employment cost index lower than expected, 1% versus 1.2.
Personal income's a little weaker.
Core PCE 0.1 higher than expected.
Okay. And look at the dollar index is actually coming under a little bit of pressure here. So that's interesting.
Core PCE at 0.5% month on month. Just, let that sink in. Right?
Yeah.
And I remind you that core is no energy, no food. Like, core in essence excludes things that are super vital for every person. You know what I mean?
Yeah, the ECI is coming down a little bit. So anyway, Richard asked Blake, do you have that as a pattern in play on the Aussie dollar? Not yet. I just got up, man. Like literally. give me a second. I'm still trying to brush the cobwebs off overnight, for crying out loud. But yeah, Richard, I'll probably be on that today. No soup for you. Hey, we are going to be handing things over to Dale and Cayman. But before I do this, I need to mention this because it is Friday, but most importantly, and this is, by the way, everybody in the ForexAnalytix community say hello. And there's Paul Franco, he's in there. There's a bunch of other guys and gals. Everybody's kind of chatting. We have, and there's Simon saying hello to you guys that are listening in. We have the Flowonomics room or the Forex Flow room, Spanish chat room, the news and research room. We have the trades room where we talk about I told everybody I got filled in my Aussie dollar at 69.80 overnight. And, this is our chat room. This is our community. What you see here, the ForexAnalytix, here's our platform that has all these great little tools and features like the live squawk feed, news flow, risk management calculators, analysis, basic technical analysis, macro analysis, Elliott wave analysis, harmonic analysis. All this is available to you guys for a very inexpensive price for the next couple of days, because as of January 30th, we pull the plug on that. That's this weekend. Then you won't see these prices for a long time. Anybody who's been around for a while knows that, hey, when it's gone, it's gone. And we've had this special pricing out for the last couple of weeks. It's our beginning of the year pricing, New Year's offer. So take advantage of it and get involved in the ForexAnalytix community, because when it's gone this weekend, it will not be around any longer. So thanks everybody for joining us. Dale, I'm excited for you to have your interview with Cayman. I'm going to turn my speakers up and sit back and listen in to you guys.
I just want to mention one point for people that don't know us, is that over the last 4.5 years, we have an unreal retention rate of people that stay with us. And that's a statement in itself. So, if you're afraid that you're going to be around for a long time with us, don't join, because most that join stay around for, years. Okay. So I just wanted to say that I think that's pretty important, because a lot of services have a revolving door that could create a windstorm.
Yeah, our attrition rate is very low. And the reason why that is, and I was talking to some traders about that yesterday. Nick is like, hey, I was a light subscriber and now I'm, in the premium. It's like, that's because we offer an amazing product for a very little amount of money. And it's because we want to make it accessible to as many traders as possible. But we also have to, sustain, we have, team members and stuff. ForexAnalytix has invested a lot of money into this platform that you see right here over the last 5-6 years. So,
and we're still doing so.
And we do every single month.
Single month.
Yeah. Shohan said, I just got the annual. I was waiting for 3 months. Well, glad to have you, Shohan. And by the way, it's been nice to have him in the chat room the last couple, like the last few days. So anyway, hey, take over with Cayman. Cayman, excited. one of the big additions for our team has been, having Ryan and Cayman from the Forex Flow team, and I love their knowledge and expertise and professionalism, and we love having Cayman in the chat room. So I'll let you guys take over from here. You guys make sure you stick around for this one.
Cayman, my new
Yeah, I
trading
will
warrior
stick
brother. How are you, buddy?
Yeah, good.
I tell you, I'm learning from you quite a bit. You know what I haven't seen since you've been with us? I'm not sure if you're willing to show it, but your setup and what you're looking at every day. Could you share your screen?
Yeah, we will. Okay. So just let me introduce for those who don't know me. I've been mainly a SpotFX market.
Oh no, this is my job.
Oh, this is your job. All right.
Yeah.
So
Okay.
take it away.
So I mean, you could share your screen when you want. I'm not sure if you want to go on camera, but okay. All right. So what I like to do is I like to take people back to like the beginning of their careers. Okay. And so let's get in a time machine.
Yeah.
And you're in high school or you're at the university, and you're
high school.
thinking to yourself, wow, I have my whole life ahead of me. What
No,
did you
I'm
want
just-
to do? What did you want to do?
I didn't know what I wanted to do. The way I ended up in dealing rooms was my brother used to work for Citibank. He's been with Citibank all of his career back in Belgium. And being in the last year of high school, he said, like, well, why don't you just come and have a month as a job student in the bank? And I was so fortunate to end up in the dealing room, and the rest is really history. I stayed. So I stayed and learned a lot from very good bankers over there. Mainly started on the money market. I don't know if you recall those old fiduciary trades, deals. We were like writing them all down by hand in those days. But then a year after that, I moved over to the local Belgian bank, which has become ING after that. And there I really ended up on the SpotFX desk, and haven't done anything else than SpotFX throughout my career since then. Mainly Belgian franc, of course, when I started, but then I've been gradually moving over to loads of other currencies. I've been market making Scandies, the old ERM currencies back in the 90s. And then since 1997, really, I moved over to, in the meantime, I moved from the Belgian bank back to Citibank and then to an English bank. But the only currency I never really wanted to make a market in was cable or sterling. I never had any affinities to make markets in.
Was it the way it traded, or what? You didn't like Winston Churchill, huh?
I think it was just a little bit too much. How shall I say? Kept in hands by the big four UK banks, and then some big American banks. When JP Morgan called up for a price, it was near guaranteed loss to get out of it. So I'd rather leave that to the specialists.
Yeah, you were very fortunate to have a relative in the business and be brought right into where trading is done. What people have to go through now to discern what is good quality and what is who is a charlatan. For myself, Cayman, I went to university in the middle of the cornfields of DeKalb, Illinois. And I had no idea when I was going to school there that I'd be trading corn futures. But, so you knew right away. What got me down there was someone invited me to the CME. And once I was in the gallery and seen a few markets go fast market, you remember those days in open outcry, they'd put up fast market and brokers weren't held to the price during that time frame. And there were roars on the floor. I was hooked. So I just went down and found a job as a runner on the floor, but I had no idea what I was going to do out of college. So the rest was history once I saw the pork belly pit. You know I took a course in technical analysis while I was there. What influenced you and what did you learn early on in your career that helped you develop as a technician, being able to start to read markets, and how long did it take you, do you feel, to become more proficient at the desk?
Yeah, it's really, but first of all, it took years. That is one thing. When I came out of, I just had the general education, and it's by pure accident that I started in a dealing room. In those days, to be on a spot desk, you needed a little bit of a gambling attitude, and the most important thing on an FX spot desk in those days was to be fast. Because you make prices to clients, they don't necessarily trade the way you expect them to trade or the way you want them to trade, and most of the time, actually, the opposite. So we needed to be really, really, really fast to get out of positions with minimal or bigger risk sometimes, but for sure trying just to make money. That was our main objective. And that was what we were asked to do, is just try to make money out of anything that you're given to trade. And therefore, in those early 80s, in early to mid 80s, we were called like the kids generation. Like the banks only wanted very junior or young traders to be fast in the FX spot market.
Like gamers. Were they recruiting gamers back then?
Well, you didn't have many games.
That's
many fast games around.
Yeah, that's right. We were playing Pong.
Yeah.
Back then, right?
Yeah,
okay.
Yeah.
All right. So was there enough money to make on these trades on the spread? Was the spread enough, or did you have to hold orders or positions to have the market move your way?
In those days, spreads were still reasonable. It's really when the 90s, when the e-commerce, when the electronic trading started to come into the FX spot market, that spreads like really tightened a lot. After the, let's say, really after the when the ERM exploded. After that, many more intervenients came in the market. Many more players had access to electronic markets and spreads. There was a real competition to get volume in, because volume meant the more volume you can get, the more there was a chance to make money.
Right.
And so we were like really trading on number of trades and volume. But in the process, I learned a lot. I learned a lot about markets. I learned a lot about economics. I'm still not an economist, but I'm like, how should I say, like a soccer player. I don't know how the equipment is made. I don't know how the shoes are made. I don't know the ball are made, but you learn how to play the game.
You learn how to kick it.
Yeah, you learn how to play the game.
Yeah.
So basically, that is the main thing. And then
were you able to trade your own account when you were at a dealing desk, or was that you couldn't trade? You couldn't have any account anywhere else to speculate.
We could actually speculate on
stocks.
Equities. Yeah.
Okay.
Stocks.
As long as it was an unrelated asset class.
Absolutely, but we could not trade FX outside of for our own account.
Okay, and you know, when you're on the dealing desk, you're not looking at weekly charts or daily charts. You're just really kind of trading the edge because you see where the bids and offers are on your screen. Or did you make a transition to being a little bit more technical as the charts when did charts start coming into play for you? Was it on the dealing desk? Because I knew most of the guys on the floor, the only charting they may do is they would have a clerk keep up point and figure charts for them.
Well, I was going to mention exactly that.
Really?
I was going
Okay.
to ask you, do you remember the good old point and figure charts?
Yeah, sure. The X's and O, tic-tac-toe charts. Yeah.
It was.
So you kept those up?
That was crazy. I didn't, but I had a couple of colleagues sitting next to me who did, and they were always like showing me like what the point of figures were showing. And then I said, "But what is the point of figures going to help me when I don't know, Paul Tudor Jones is giving me $300 yen and I can't get out of them? I mean, where are the point of figures to help me there? You know? No, for me charts. Well, I've been looking at them for the global picture since, let's say, exactly after that ERM went bust in Europe, and there was all those talks about the euro being created, and so I started to think, well, we're taking like 11, 12 or more currencies away, and we throw it all into one. So it's probably going to be a bit, in one way, easier to follow bigger trends or shifts between one big block, the euro, the other big block, the yen, and the dollar,
Deutschmark,
and the yen. You know, sorry?
And the Deutschmark.
In those days, the Deutsche Mark was still there, but in those days, it was actually easy trading Deutsche Mark. You could only buy it because those guys were having such a big economy, very low, very low inflation, stable interest rates, whatever. There was only one way for the Deutsche Mark. You could only buy it. So then charts came smalls into play, but until really the end of my spot FX banking career, I was much more driven by fundamentals, flow information, because the good thing about sitting in a bank and sitting in the major banks is you get flow information. And you also have information from your colleagues. Imagine yourself sitting in a 500 people dealing room, the information flow that just floats around. You don't, I'm not talking about Reuters or Bloomberg or which are of course like
the buzz in the room, the buzz in the room.
Exactly, the buzz in the room, or oh, we got real money starting to buy EM, or we got real money starting to buy bonds if you were lucky to sit not too far from bonds, or we were sitting obviously next to the FX option traders, and you just hear what the vols are doing, or when they were doing a big ticket. So this kind of information and some fundamentals, and then held by actually very little, but a little bit of charts were enough to sit in a dealing room and try to make money. Because from when the euro really started, because people sometimes think it's like a very nice job and like
it's easy.
You
just go in and print money.
But especially on FX spot trading desks, we have to imagine that since the euro is created, spreads went to zero, absolutely zero. Okay. When we saw euro dollar trade like to now 111.53, 54, well, we would show that in $20-30 million and the spread zero, or even more when the client.
How the bank make money on during those times?
Because
without spread.
Because there was always like we took risks. When let's say for instance, if the dollar
you might hold the other side of the trade for a little while.
Yeah, we kind of held the trade, or when you really have big flows, you could be given and paid at the same time, or in a few minutes interval, or you went with the flow. Because we still had like those call-out calls in the old days where you could call up other banks and hit them. And when you got given, let's say, $100 million, you could sell 150. You might lose a little on the 100, but you made it all back on the 50 more that you sold. You know those, but there was always a risk involved with everything. But it was certainly not on spreads anymore that we were making our money. But it taught the traders and myself to be always very sharp and to be always alert to what could be happening, right?
You know, I have one joke about that relates to that. There was a father and a son at having dinner, and his son kept putting a quarter in his mouth, and his father said, "Be careful, son, you might swallow that and choke." So he next thing he noticed, the kid swallowed it and he's choking, and some guy runs over to his son and kicks him as hard as he could, not a Heimlich maneuver, right in his private parts, and the quarter just popped out of the kid's mouth. And the father was so grateful. He said, "Oh, thank you so much, doctor, for saving my life." And the guy said, "I'm not a doctor, I'm a market maker." Anyway, so what was it that kind of led where you felt you were like, you wanted to do something different when you decided to leave the desk? What was going on in your head? You know, change is always, you know, at times we're moved to change, at times change moves us. What was going on with you in your life that you wanted to give up something you had been doing for so long and reinvent yourself?
It was not my choice.
Okay. See, sometimes we choose.
Yeah, but I mean, no. But going into retail was my choice. But leaving the bank was not my choice. But the fact that I was still sitting doing FX spot trading at the age over 50, and which was rarely seen.
Okay.
Because usually by the age of 30.
So you were the Tom Brady of FX desk.
Usually.
Huh? Okay.
When I started my market making, I was about 18 years old.
Yeah.
And most of the spot FX market traders were burned out by the age of 35, 40. And but my boss always said, "No, you have to," because I asked a couple of times. I said, "Let me go over to sales or do it."
Did they call you Pops?
Yeah, some of them did. And at one stage I was trading with upcoming traders who were younger than my oldest son, but then, you know, everything got automized so much more. Voice trader community got shrunk so much more. Everything went on the machine. So there was this aura as well around voice traders chit-chatting to each other, whatever. So and the bank as well decided that they wanted less expats, because at that time I was in Tokyo.
Okay.
So that ended, and then I said, like, okay, I mean, let me use this experience and start to trade my own money. And so I'm still doing it today. So I must be doing something right. But I still use my market.
How was that transition though? Okay, I mean, okay, because you know, Cayman, I know guys that were millionaires at the CME from holding a deck and filling orders and scalping, and they didn't have to be directional. They didn't have to know where the market was going. They didn't have to, you know, set up trades with stops and targets, and they couldn't make the transition. They went from they went off the floor and tried it for a while. And a lot of them could not adjust to from just trading the flow to having to be right.
Yeah, I mean, very much so, because when you do the transition between a desk or between a pit or between you know, like a big environment where there's a lot of buzz going around, as I was saying, you have this information flow around,
right?
And you move from okay, in Tokyo the dealing room was smaller, but when I was sitting in London or Paris, we had like 300, 400, 500 people dealing rooms, and you move from a 500 people dealing room to sit alone in front of your screen. That transition was very hard, and I must say, for a couple of years, I was just saying like, wow, I mean, maybe I should go back into a dealing room, because I must say, when I started to retail trade, I had so much like all of what still was going around from a dealing room in my head, and all this experience, that I actually made my first year was extremely good. But then my second year was like really starting to
Drawdowns.
lose money, but I couldn't live from it, you know.
Yeah.
So then I had to do the switch and go like, okay, keep those fundamentals, but now you have to include more tech, because you don't have the noise of the flows in your ears anymore. You need to find something else. I still have, I think, so this experience of, okay, we are here at this point in the market. There is a fair chance that investors might do this, or hedge funds might do this. That's the experience that you keep. That's the luggage that we keep. But
so I bet that I also bet that services like Live Squawk and things to have a little buzz in the room and
exactly
be alerted must have at least comforted you a little bit that you had news flow, right?
Yeah. You know what the big difference to me is, one of the big differences to me is that if you have those squawks, or if you are even in the ForexAnalytix room, you get information that you don't necessarily were looking at, something that you don't necessarily were looking at, and that is of a major added value. I said, since I've been working with Ryan in Forex Flow, that's also what we saw, is that we are getting a lot back as well from what we are giving to this community. Especially, I must say, since we joined ForexAnalytix, because there's more people around, I see a big variety of traders, like from the day-to-day trader, the 15 minutes or 3 minutes charts even, to very long-term traders. And I love this mix of IDs.
Right.
And what I'd like to say as well to people, while we are on the trading side of things, there is no one way of trading markets.
To skin the cat.
The way for you to trade markets is the one that you feel the most comfortable with.
That's exactly what Jack Schwager says.
You have to find, in a way, you have to find the setup that makes you feel most comfortable in, at times, a very uncomfortable environment. So it could be that you're a short-term trader. You will manage a lot of positions in a short time frame with relatively tight stops. Don't put them too tight, because, as we all know, we are only 5 or 10% of what's going on in the market, all the retail traders together. So imagine one retail trader yourself, you represent 0 of the market. So there are so many flows going around in the market that we cannot control. Corporate flows, central bank flows, hedge funds, asset management flows. And those are the things that I'm trying to help people with, is to understand, trying to help people to understand what is their setup.
Help them find what they need for their own style. Right. And you know what, the important point is, perhaps communities, retail communities, are in a way like the dealing desk floor, the trading floor of big banks, only we're not right next to each other and talking, but the community is supportive and intelligence gathering. I'm a big believer in intelligence gathering. I have my own ideas, and I'm sure you have your own ideas, but I also believe that you probably check out views from traders whose work you respect.
Constantly.
Do you do that?
And I'm that's what I'm telling people. We did this webinar at the start of our Forex Flow adventure, and I think the week after or 2 weeks after, you did one, and that's the first time I listened and viewed some of your own webinars. And you said exactly the same as what I said on the week and a half before on our Forex Flow webinar, and I went like, that's it. I think there a lot of it is simple common sense, but
Universal truths.
People forget that you can't sit on a desk and say, okay, I'm starting to trade. No, you have to prepare a trade. But what do you do to prepare a trade? And one of those things for me is I'm reading a lot. I'm reading, like for instance, the Mark Chandler stuff every morning. I know Blake loves it. You love it. We all love Mark Chandler because there's a lot of stuff in what they're reading. I like it. But then on the side, I read the usual Reuters. I don't have Bloomberg Live, but I'm seeing the articles. But then I'm also interested in knowing what people like Dalio are thinking, what people like, of course, Dalio now is more on another planet, but what he was thinking anyway, or the people working for him are thinking. And from there, with my own views, with my own bias that we create, then you can, this is part of your preparation to make, to start to have a position. And then you pick up your charts and say like, all right, this is it. Now this is the setup that I want to have. And it's the same process, in my opinion, whether you are a day trader or whether you are a very long-term trader, only that the day trader is doing the same thing, but in a shorter time frame, but you can have the same bias. Like, let's say, for instance, you think S&P 500 is now going to correct, right? The longer term trader will have said like, okay, 4,800, we didn't know whether it was a top or not, but now we're back below 4,750. We've seen this range 46, 48 during the year end. And you can say like, okay, and then we went back down to 45.80, 46, where it bounced from for the year end. And we went back up to 47.5, but there it stopped, 47.5, which was the level before. So the medium-term trader can say that, all right, now I have my levels in mind. I think this market is about to turn, so I can start to sell somewhere close to 47.5 and put my stop above the highs, above the 48, in case it's not done. And now I'm letting it run, and the medium-term trader is going to have a laugh because we are at 4,300. If you are a very short-term trader, which some of them are in the Forex Analytics room, and extremely good, so you can trade everything in between, because there's been so many bounces up and down.
Been great scalping. 30, 40, even if you weren't net short for the whole move, there's been great scalps on the long and short side.
Absolutely.
All week.
Absolutely. So I think when you start to trade as a retail trader, you have to make up your mind where your comfort zone will be. For me personally, I must say I'm somewhere in between. I'm doing day-to-day trading, but I also never try to lose track of where we are in the global bias of things, you know. Like for instance, now the central banks are on the move. What does it mean? So that gives me a medium-term likelihood of a bias, and from there on I pick up my charts and go, here we go.
I learned a new trading signal this year in this environment. The next time I see a CEO who has stepped aside after his shares have gone up 100 times in value and get into a spaceship to fly into lower space, it's going to be a sign to short that company. And if you look at Amazon, and when Bezos took off and when Virgin took off, that was those were peaks. So the next time multi-billionaires are playing with their new toys, you know that you got to get short. So
you can't compare it to Musk though, because he's in space constantly. So
even when he's on Earth.
No, he's not on Earth.
Even when his ethereal body is. So, Cayman, what do you see as your mission here at ForexAnalytix? Being part of this team, I think you're a great addition. Ryan's a great addition. Do you see yourself as having a mission for subscribers when you're around?
Well, I think it's to show them a little bit of the fundamentals, which we are doing in the flow room or in the fundamental room, or however the name is going to be. But at the same time, I'm also looking at technical setups, but I'm trying to base for at least the medium term, I'm trying to base it all on the bias, which is fundamentally based, and then supported by a technical picture, which makes sense. Because
Do you like teaching? It takes a lot of patience. It takes a lot of patience to teach. Do you have it?
I wouldn't call it teaching.
Mentoring.
Yeah, mentoring, coaching.
All right, what's a better word?
Yeah, just well, some of them they call it holding hands. So why not?
How about how about coach?
Just work together for a while.
Yeah.
And I think that's and I think what I'm trying to or what I'm possibly okay at in showing people is how to manage their stop losses, because after you can put an actual stop loss, you can put a mental stop loss, but when you have a bias, when you take positions, whether it be on the 5 to 10 minutes or 3 years, there is always got to be a moment where you say, stop, I'm wrong.
Yeah.
And make people accept that stop, I'm wrong is not when your account goes to zero. It's
right.
And because one of them, and that was on my trader's cheat sheet, is like always make sure you can do the next trade. There's nothing worse than not to have the opportunity to take your next trade.
Like that.
So on any trade you take, the trade will, in my case at least, the size will depend on a conviction. The risk I'm putting in will depend on my conviction of a trade. It can be very short-term trades in quite high amounts, but pip-wise the risk is small, so the risk to my account is kept within reasonable dimension. But what I really want to do, and that is true for people who manage a $1,000 or $10,000 account, but people and also for people who manage $1 billion account in a way, is always make sure you have the opportunity to do your next trade, because opportunities in this market, they don't stop. There will be opportunities all the time. As long as there's money flowing in this market, there will be opportunities.
Richard is saying that you've helped him a lot by having him loosen his stops. I call it let your trades breathe. And
you have to give the opportunity to your trade to be right. If you let's say take an example, sell $yen at 115.35, but you put your stop at 115.42 in the middle of nowhere, the next $500 that goes through in the market, because we don't know, there might be somebody at 35 or 36 calling up JP Morgan and go like, I need to buy $1 billion yen because that is what my book tells me to do. The dollar yen is 43, 44. By doing it, perhaps, I don't know, or maybe 500 million. The billion is maybe a bit much, but maybe 500 million. It takes it up 7 or 8 points, takes your position out.
Yeah,
but
then it works.
What did it change to the market? Nothing. Zero.
Yeah.
Those people had to do that. It's maybe a corporate somewhere who has to do it, and that takes you out. So you rather have like a smaller position in that case, but put your stop, if you want to risk exactly the same thing, but put your stop a little bit further away.
Yeah.
Of course, based on the level. But I've noticed that, and even in my case, I've done the mistake that if you put your stops in the middle of nowhere, there's also a fair chance that somebody comes to that middle of nowhere and takes you out.
Yeah, I say if you say, for example, a swing trader, if you can't be wrong for a day, how can you be right for 3?
Yeah.
I think it's fantastic that you're with us. We're bumping into the morning edge coming in here.
Yeah, I'm sorry
Cayman,
about it. I was
No, it's
planning to
okay.
show. I was planning to show you my screen, but then we got chatting.
Go ahead, give us a flash. Give us a flash of the screen so we could see it.
Okay,
Yeah,
let me.
sure.
And I was gonna say, you guys have, and hey, Cayman, we can
Hey.
start it's your family, obviously. So if you go as long as you want, and then I'll start the morning edge right after that. Okay.
Oh, please.
Okay.
No. I'm not going to take too much of your time. Where is my chart screen? Ah, but you're in front. So hang on a minute. I'm pushing you over to the side.
Okay, yeah.
And I'll share
Give me
my
a Dramamine. We're on
screen
top.
here. Share.
There you go.
Do you see it?
You got it.
Oh, that's pretty bizarre.
Online.
Pretty bizarre because my I don't see my own screen.
Okay, well, we do. We see
Oh, you do it?
the XAU,
so-
the gold on the left, and
Yeah, I've got like
silver.
you see, I've got like quite a few tabs on there.
Okay,
I've got like
yeah.
the rates. I've got gold. I've got some yields on there.
Yeah.
I've got gold, silver, oils. Then I've got like the currencies: euro, dollar, sterling.
Yeah.
The yen, commodities, Canada, and then a bit of Scandies. And then a bit of emerging markets. That was one I showed in the room as well on the rand. You see this confluence of trend lines that came in the low 15s, which really held like a dream. I only had a small dabble in it up back through this 15, 17 zone up to like high 20s really in this area, and I missed it after the FOMC.
All right. Do the different colors? Do the different colors? Is it kind of like what Ryan says? He'll have his levels with different colors based upon importance and significance.
No, these are just the fibs.
Okay, got it.
These are just Fibonacci. I like Fibonacci. I like a few trend lines. I've come and we're going back to the start of our conversation that moving averages are going to have a bigger importance, to me at least, in stock markets or indices than they have on FX.
Because more people follow them in
I think
equities,
so.
the 50 and 200. Yeah.
You know, as you're saying yourself on F.A.C.E and on your own webinars, is that in the equity markets, everybody's looking at the moving averages.
Right.
In the FX, it's not okay. All the retailers are looking at it. I've noticed, but I don't think it's the primary decider on a move. I sometimes look at other indicators, but I'm not a big fan of the RSI, stochastics, and things like that, because
no momentum indicators.
No, not really.
Okay.
I think these pictures show enough, and as we all know, an RSI can stay high or low for longer in time that we would sometimes like to have a position on.
Yeah.
Because I do think there's a time factor in a position. You can, for instance, sit long in dollar yen at 115.35, let's say, and then for 2 or 3 days it's hanging around there, and things may all of a sudden change, and it might not be the time anymore to keep that position. So, but in the meantime, your momentum indicators will have adjusted. And
right.
To be fair, I don't really understand all of it. To not really understand is not the right word, but I don't think they add that much value in my own case. If I'm still in that position, then this indicator doesn't tell me much anymore. And on the contrary, it can dollar yen, or let's take the example of dollar yen, can go up and up and up and up. Your RSI stays stays high, but it just keep going. You can't use it to counter trade. But I know how the way you use it is different. And if you feel very comfortable with that, which you are, I mean, great. That's what I was saying. There's not one way of trading markets.
I appreciate that. So I also appreciate that Ryan brought you over and that you're part of the team, and to hear your thoughts every day, I think is an edge for everyone who hears you, Cayman.
Yeah. Do you see this S&P 500?
Yeah, I do.
I want to show you something, if I may, just like 1 minute.
Go.
So here you just have this this trend, this channel.
Yeah.
All right, with the Fibonacci on it. And then we broken, and then we broken through the 200 there. We had this 46, which was retested and then goes lower. Yeah. And then we stopped on the 200, little bounce, broke through, and then the 200 became resistance. And Stelios was saying like, sell the rallies, and those levels worked like a dream, and he was very right in doing so. But then, and now let me show you this. This is what I found out the day we went to 42.20. And let me hide the Fibonacci's, the other ones now. And I wanted to have your ID on this. Look at this. This is the Fibonacci extension, the trend-based Fib extension. And if you look at this from the whole move in 2020, and then we started to go up again, and then you take the top, assuming that it was a top. If you look at the 50 here, it goes straight on to that 42.20s where we stopped. And I thought it was extremely interesting. I haven't.
What's the next level underneath it? Should it take it out?
Well, today 4100.
41. Okay.
Now 40, 80, 41. But okay. I just went into it and I found it very interesting, because it did show those particular levels where it actually reacted a couple of times, especially this one.
And that's something, I mean, all of us technicians been doing it for decades, and then we're always surprised.
It's the first time I saw it.
Oh, okay. But I mean, we're always surprised when we get we'll have a line and it'll respect it and react to it, and it still amazes me. So it was great talking to you.
Anyway, yeah, maybe we can do
learned
it,
a lot.
Maybe we can do it another time again. Well,
we will.
How do I do stop sharing screen?
Just a drop down menu that you have will just
stop share.
And I could end it. There you go. So okay. Listen, you survived an interview with me, and you're now my trading warrior brother.
Alrighty, that's official.
It is official, and appreciate you and all you're doing for all our trading family community, and glad that our paths crossed, and thank you for your insights that you give us.
Thank you so much, and I appreciate you as well. And you, how much is it now? 273 years experience?
Almost that, and 100,000 interviews. You're my 100,000th interview.
Really?
All right, buddy.
Wow.
Yeah. No, it's well over. It's a few thousand. Anyway, I'll always remember this. Unlike Steve Volge, who I interviewed on FX Street, and I couldn't remember it, and I still bug him about it. And anyway, very nice to have a conversation with you. Glad you're part of the team, that I could shoot a question to you anytime, and not just during FA.C.E. So, when you remember, Cayman's around. He's just another great addition, that if you need some help or you have some questions about what you're doing, you reach out, he'll reach back. Thank you, buddy.
For sure. Thank you, Dale. Have a smashing weekend.
You too, bro. Okay. And guys, Blake's going to start up the Morning Edge. I'll see everyone next week. Have a great weekend. And remember, don't just count your pips, count your blessings. Adios.